Mr. Ajay Khandelwal is an accomplished investment professional responsible for managing investor capital and identifying long-term wealth creation opportunities in Indian markets. As a fund manager at Motilal Oswal Mutual Fund, Mr. Ajay Khandelwal plays a key role in shaping investment strategies and navigating evolving market trends. His perspective combines rigorous research with a deep conviction in India's growth potential and its impact on investor wealth. Please join me in welcoming Mr. Ajay Khandelwal as he shares his insights on Rise Together, Redefining Wealth Creation for a New India. Let's have a big round of applause for him, ladies and
Please
gentlemen.
come. And to honor Mr. Ajay Khandelwal, we have Mr. Govindarajan from Bangalore. So please go to the center of the stage.
Hi. Good evening, everyone. From Motilal Oswal, thanks for the opportunity. I think the last presentation was very encouraging, I would say. I could see people were engaged. Coming to, you will put up the slide, please. I'll try to keep this simple. When we meet distributors, we get same questions, what's happening in the market, how is near term looking. But I think this is one occasion where personally I also look near term, how are the earnings last quarter, this quarter. But for a change, even I want to look a little away from what's happening near term. So let's start with this simple chart. And the observation for me from this chart is that the kind of wealth creation which is happening now in India, and you can say even globally, the pace has changed completely. You look at from 2001 till 2015, this is like cumulative 5-year of wealth creation in every 5-year time frame. Best we have done is like 35 to 40, 45 lakh crore. And now look at now. In last 2 years, every year practically we have made more money what we have made in last 5-10 years cumulatively. I want you to spend some time on it because this is very important. We are always lost in what is happening near term, last quarter, last year. People are still fixated on last 1.5 year market has not given any return. Please look at the pace of change of earning that has happened in last 5 years. Every year, again, I would like to highlight, we are making more money than what we have made during 2000s in cumulative 5 years. So I think this is first takeaway that the wealth creation, the pace, the acceleration of wealth creation is completely different from the past. Now, what is leading to this? So see, for all these years, we have been following this thinking that market is cheap, market is expensive, and there were different ways to look at it. For example, the Buffett indicator, market cap to GDP. We have always looked at it, and whenever it crossed, say, 1, we said markets are expensive. But if markets were expensive, you see how this, coming from 2008 to now, the market cap to GDP is expanding continuously for last 17 years. If this indicator was right, then market was expensive in the past and it continued to remain so. So this is another mindset change that we need to understand, that the way we are looking at things, valuing things in our mind, world is changing. Because now you have US, where market cap to GDP is 2.3 times. India, we are still at 1.2, 1.3, but we have also expanded from 0.3, 0.4 to 1.3 times. Why is this happening? See, the reason is that earlier, the economies were mainly, you think of a physical asset, a factory. A factory can produce up to its limit, where the utilization is maximum. It can serve a certain geography. It requires money to build another factory, and then only it can grow. But now what is happening is you have these brands, platform businesses, software companies, which they don't require that kind of capital, and there is no limitation. You make one software and you can reach to every nook and corner of the world. That is why now, with less capital and more reach, the old parameters which are there in our mind, that market cap to GDP, XYZ, PE, this is when it becomes expensive. I think those things now are changing. I would like to again reinforce this idea today that our traditional way of thinking about markets, wealth creation, we need to rethink. Because this is very important going forward. All these softer things will become even more important. Look at today companies. Now, Google, Meta, at these cash levels, they are still raising capital. They are preparing products for future, again, which have access across the world. So even these, I think, some of these ratios, if we hold on to them, we'll miss a large opportunity. So this is my second point. Coming to India. Now see, it took us 17 years to reach $4 trillion. And we have seen the kind of wealth creation it has done for certain businesses. In another 17 years, we will be reaching 4x of it. My simple takeaway here is that when GDP grows by 4 times, the wealth creation will happen much more than 4 times. This is why I'm showing you those slides where wealth creation will not be a linear function of your growth. It will be much higher. Because of financialization, the physical wealth limitations are not relevant. So when you think of India for next 10, 15 years, you have to think that wealth creation will not be linear. My idea today is just to reinforce these few points, that we have to think in those terms where wealth creation will be much, much higher compared to what is captured in the numbers. This is another interesting study which Mr. Ramdevji conducted this time in the wealth study. See, what happens is the wealth effect, because it is not captured in numbers, but it is there in the behavior. Now, in US, this study was done where if my portfolio grows by X%, now this is paper money, you have not realized it, but my behavior, consumption behavior changes. And this study shows that between 2% to 6% of more spend happens when your wealth increases. This is called wealth effect. Tie these two things together. India reaching from 4 trillion to say 10, 15, 16 trillion. Indians psychologically thinking that they are more richer and are going to spend more. That is where the lot of wealth creation will happen for certain businesses which are geared towards it. So I think this is another thing which is I want to put it across. Now, every country had their own journey. US, for example, they were built because they had abundant land and capital resources. They built all these sprawling highways and which helped them. China, they brought out through their industrial revolution 800 million, 80 crore people out of poverty. Now, India is in that journey. I want to tell you one thing, this whole thing when it started in US, it took time of 10 years, 15 years to build that base. After that, 35 years, they saw the impact of it. China, the same thing, 10, 15 years, they build the capacity, and after that, they reap the benefit for next 30, 35 years. In India, what we have done, we have taken a journey where we have gone on digital transformation, we have built this infrastructure. We have seen the impact, how businesses have become bigger, the fintechs of the world. Earlier, the example were given on how businesses have scaled in terms of e-com and other businesses. India has built that infrastructure for last 10 years. Now this growth will propel for next 20, 30 years. So every country has played on its strength. There is no standard format. We have chosen clearly a path where we believe that we are best suited. We have 1.4 billion people, 100 billion people almost, 1 billion people have access to internet. That is the kind of resources we have. So I think this transition is going to happen, and we have our playbook. So in my mind personally, it's a matter of time. It's not a question of whether it will happen or not, because we have got structural factors which will lead to this growth of $16 trillion. And these are the important ones. Demographics, for example. Now, China, the working population is already shrinking. For us, this working capital population will continue to grow till 2040. 15 good years of runways available to us where our working population will still be below 35 and expanding. Imagine, this is the kind of growth, at least runway we have available. Urbanization. Again, there is general studies which say urban consumer consume 3 to 4 times more than rural consumer. And now, till 2040, there will be 25 crore more people who will be migrating to urban cities. Imagine you have all these factors will actually compound over each other. So it's not that demographics will only help, the urbanization will help on top of demographics. You have people who will be spending almost 1/5 of your population spending 3 times more till 2040. So I want you guys to have, for the time being, forget about 1.5 year performance. Just think of the kind of opportunity that is available for next 15 years in India. And these are things where we have seen how world has demonstrated growth for last 15, 20 years, countries which have gone through that phase. Formalization. Now, post all this digital infrastructure which brought down businesses to formal structure, it has helped. We have got lakhs of crores of money which is coming into formal economy now, and which is, we can see it, how it has helped them. Now they have better access to financial resources. They have now better history, so money, accessibility, KYC, all these things are helping them when they require money through formal sources, which is far cheaper. So almost 200 lakh crore has come into formal economy, and we continue to see this improving. Manufacturing. I think enough spoken about it. There's another next slide where I will give you some tangible numbers about it. And digital scale. So digital scale is, as I said, 1 billion people are connected through internet, and that is why the physical limitation in India, we have skipped some of the technology wave, and we have moved to this where the businesses are scaling much faster than anybody's expectation. And it is captured in hard numbers. So look at the chart on your right. I mean, earlier, for 7 rupees of import, we were exporting 1 rupee. Now, for 3 rupees of import, we are exporting 1 rupee. Our dependency is going down drastically. Imagine with all these events that has played out in last 2-3 years, our dependency on oil, electronic import, we have no choice. We have to reduce it. Think of India after 3 years where our dependency on imports, for example, oil, electronics go down structurally. What will happen to rupee? Our currency will be far more stable. And this is structural in nature. See, every time if you ask a fund manager whether he's bullish or bearish, he will look at hard data, numbers, and instead of looking at market returns. If you tell me oil remaining at 65, 70, currency, our dependency, current account deficit continuously going down, businesses will scale without being capital intensive, will go up. There is no, I think I have zero doubt in my mind. These are the things which are very structural in nature, where our dependency on import is reducing. And these are our pain points. Every time there is some problem happens across the world, these are the ones where we struggle the most. So look at this, and on the left, you can see how we have scaled up. PLI, for example, people keep saying that it is only one or two categories where it is reflecting, but look at the size and scale. From 20, I think, let's take the case of FY19. 11,000 to now 1,700. Look at the numbers. They are staggering. We are now exporting almost 45% of the world mobiles. Our data, that way, consumption is increasing. Some of these opportunity, eventually it starts with one and then it starts reflecting in another. This is how the whole auto ecosystem, auto ancillary system got developed in India. First, we were importing and then we started having a large domestic base. We started indigenizing and then economies of scale played out. And now we export to the world. So 3-5 years from here, I think our exports will surprise everyone. We will be making more and more parts here. A lot of these multinationals are already bringing their ecosystem. A lot of companies we talk to, they are doing, say, 5-part, 10-part. But over a period of time, I believe that the content per electronics will continue to increase in India. So this is another great opportunity. And it is reflecting in because see, innovation will thrive markets. Look at the startup ecosystem in India. We are third largest and now leaps and bounds ahead of all these developed markets. We are at 120. Look at the startups, unicorns, which are there in India. So we talk about AI, we are not present, but we are moving in that direction. We are, maybe in semiconductor, we are behind. But 5 years from now, once these companies will put up plants, we'll see a completely different ecosystem, which is, I think, already reflected in some parts, but it will gather more steam, and 3-5 years down the line, I think these numbers will show that all the effort that we are putting in, these numbers will accelerate from here. Last couple of things. For markets to do well, your health has to be good. Look at all the events past where we have seen any kind of global disturbance. Our banking system was always most vulnerable. 2008, 13, 17, 20, 21. Look at now. We are in best shape of health in terms of corporate profitability. Our corporate profitability to GDP is at almost all-time high, 5.2%. Same is true with our banking system. This time, we have not heard anything. Currency has depreciated sharply, but banking system is very strong. That gives me the confidence, because every time there's been a problem across the globe in India, our banks, they were very vulnerable. Now the balance sheets are so strong that even if tomorrow, and I'm sure now these events will happen more often, we are prepared for it. But our balance sheets, our health, economic health is much stronger to take any kind of blow. So that is there. I think in the interest of time, there are other examples. We have already spoken about which sectors will benefit, which companies will benefit. For Motilal, I think this is one difference from the other AMCs. We focus very closely on the sectors where the earning growth is going to be far superior to index and our peers. So our portfolio, generally people say that they are high PE. But when you compare our earning vis-a-vis PE, which is what we always talk about. You look at price earning to growth for us. You look at the quality, health of our portfolios, the return on capital. That is when you will understand that our portfolios are actually trending below indices in terms of price earning to growth, ROC profile is better, cash generation is better. So these are some of the sectors which I believe will continue, and they will continue to get investors' attention. Lastly, there is this question which is always asked, that FII, what is happening to FII money? My point is, people say SIPs and retail is only helping FII exit. Data suggests something else. Last 2 years, EPFO, pension money, insurance money, other DIIs, they are actually bringing a lot more money. So the flows in India are much more structural. I don't think that FII flow or SIP is the only factor which we need to pay attention to. Our flows are improving drastically, and they are much more structured and stable. So that comes, I conclude my presentation. I would like to say, we need to think beyond near term. India's story is there for 10, 15 years. At Motilal, our focus is to bring those sectors in portfolio which can deliver highest growth. And I think that is where, as partners, advisors, you need to make sure your clients are not myopic about 6-month returns. They need to look beyond that, because 5, 10 years from now, the difference would be, everyone will say there was an opportunity, but who really capitalized on the opportunity? That is where I think we need to pay attention to. Thank you, everyone.
Thank you, Mr. Ajay. Please come to the center. I call upon Mr. Nagaraj from Dharapuram to honor the guest. Next up, we have Mr. Vijay Mantri